Hello students, today I am covering the accounts topic which is called bank reconciliation statement. Uh, Usually we see that our cash account and the bank statement account has a difference in balance at the end of the month. So we have to tally both these accounts. So I have taken a model of question here which deals almost each and every issues of the difference, and we are solving it in Excel. Okay, so we have to collect two things. One is the adjusted closing balance of bank statement and adjusted closing balance of cash account. So we take the first the unadjusted closing balance which the bank statement is showing on the last day, that is 27,585, and on the second side we will take the unadjusted closing balance of cash account which is 25,528. Now the other points B, C, D, E, F and G showing the issue, points and the issues through which there exists a difference between both bank statement account and the cash book account. Right. B point says that there are some checks which the company had drawn and sent that to their suppliers, but supplier hadn't encashed them until now. So cash book has already carried the cash account, but bank had not and debited the account. So where we have to take action? Cash book is okay here. Only bank account treatment has to be take place. So we deduct the checks outstanding. These are called the check outstanding, which are yet to be paid by the bank. So we deduct all the checks. Check 3031, check 3065 and check 3069 along with the amount 1390, 471 and 2158. Right. Now point C. Point C says that there is a check number called 3056 which company has drawn towards the July rent expense. The check has written in good form, drawn in good form and delivered to the tenant, to the landlord in a good form. But while recording the check in the cash book, there is a mistake. Instead of 1210, we have recorded it at 1200, 1200, right? So there is a gap in recording and actual amount. So the actual amount gap is $10. So we reduce the cash book by another $10 because we have recorded it short. So actual amount is 1210 and we reduce it with 1200 and the balance is 10. So we have to reduce the cash book account with 10 here because there is no error in the bank statement. We do not disturb that, and here only the cash book because there we have recorded short by $10, right? Now we it's to next point, that is the D. The July bank statement shows that bank collected $10,000 cash on the on a note for branch for the company. Branch has not recorded this event before receiving the statement, because we branch are able to know only when they receive the statement. Before that, a bank has not informed the branch to record the transaction of collection of note of $10,000. Right? So bank has credited the account of the company. Now there is we have to enter it in our cash book. So we add, because we have received the cash, so we add the bank direct collection of note $10,000. Right? We will clear this point because bank had directly received the note, and the entry we have made in the cash account. Now we go to another point, E, which says that the bank statement shows there is a NSF check. NSF check is not sufficient fund check, which we have returned. We have received a check from our customer towards the payment of some goods or service, right? When we put it in our bank, and bank will send that to the drawee bank, the drawee bank returns the check as NSF check. There is not sufficient fund check. Where the account do not have that much of balance, that the check got cleared. Okay, our bank received the check as NSF check returned. So our bank had not credited the company's account with the amount. But while depositing the check in the bank, we have debited the cash account. So now, when the check has returned uncashed, we have to reverse the original entry, that is the credit and debit of the cash account. So we reduce the amount through the transaction less NSF check received from bank, $805. We reduce that. The bank statement already reduced that, right? Now because we are able to know this event only at the receipt of the bank statement, so we have reduced our cash account by NSF check amount, that is $805. Now we go to the other event, that is the July statement shows charges of $15 by the bank towards the bank services charges, and the company able to know about this charge when they receive the bank statement. So it's a charge by the bank towards the bank services charge, and now the company has to make the entry of bank services charges by the bank. So we reduce our cash by that amount, that is the $15. So we reduce here the bank charges by $15. Now we go to the next transaction, that is the G. The company has deposited $11,132 at the eve of the July 31st, the last day of the month at the eve, but the bank has not made any entry in the company's account on that day. The entry would be made on the next day, that is the first day of the next month. So, but the company has already made the entry in its book while depositing the cash in the bank. So there is not error in the cash account. What we where we have to do the entry? We have to do the entry in the bank statement. On the next day, bank automatically debit the company's account. So here we add the deposit in transit. In transit, there is a deposit in transit which the bank has to make entry on the next day, that is the first day of the next period. So we add here the deposit in transit 11,132. When we total all the transaction, all the amount, here we reach out to total of 34,698, and when we total the cash we book differences along with the unregistered closing balance, we reach out to the amount of 34,698. The total, both the total equals. That means our banking return has tallied. Bank statement, the adjusted closing balance of bank statement is 34,698, and the adjusted cash closing balance of cash account is also $34,698. So we our bank statement statement has tallied. So this way we tally our bank statement, and this process we have to carry on monthly basis in our regular, in our actual company transaction. Thank you, students.